Welcome you all. In this session, we are going to discuss about reconciliations, reconciliation types, why we do reconciliation. I would like to discuss about it, and in next session, we'll come up with different breaks and exercise, so that you can understand it. Stock recon, cash recon, position recon, internal recon, external recon. So we'll cover all the scenarios in more detail so that you can understand reconciliations. So now let's look at the reconciliation. See, reconciliation, it means it's a matching of record process. Basically, statement versus ledger. Statement, it's a bank statement, and ledger, it's accounting records. So in accounting process or in a banking process, in a broking process, right, we do reconciliations between a statement and ledger. So we try to match the records, right? And that's what I said. Recon, it means it's a matching, record matching process. If you see any discrepancy between statement versus ledger, that comes under reconciliation. So that will have to do more reconciliations and resolve the breaks. See, there are lots of scenarios where due to time difference, due to price difference, due to quantity difference, due to incorrect record keeping or missed by that let's say analyst who is working on posting records. Due to all of this reasons, you would see there would be discrepancy in the books of accounts. Could be bank book, or could be broker book, or could be fund accounting book, and those breaks, basically you need to investigate and find out why there is a discrepancy, so that you can resolve those discrepancies and adjust or post in the system. And once you post it, same records that we need to approve it. The reason is, guys, if there is any discrepancy, then that discrepancy may impact on a financial statement of company, fund, bank, broker, or even individual as well. So it's highly critical to identify discrepancies, resolve them, and approve that records, right? And if you see any unidentified breaks without any source, or if there is, let's say, source or information is not sufficient to action it or adjust it, in that case, definitely what you can do, then you can tag it, or just update the comment like you're investigating, or pending with broker, pending with counterparty, or let's say due to break is pending due to time difference or dates. That's how we label the status as well. But at the end, the goal would be to resolve those breaks on priority and make sure that those are not impacting on financial statement. That's why reconciliation becomes crucial and even important also. If we talk about fund accounting, in a fund accounting, fund maintains fund book. Okay, broker maintains broker book, and banks or custodian maintain custodian books. See, banks or custodian, they are responsible for cash in movement and cash out, because as a fund appoint bank as a custodian to maintain the cash transactions, or cash in cash out transactions, basically. So it means the statement you can refer it from the bank, and brokers provide investment or trading details, right? Trading of stocks, or positions and derivative contracts, or intraday positions, and all reports that you can generate from the broker. And here the reconciliation would be between accounting system versus banks, custodian, and brokers. Banks, custodian, and brokers would be external side, and fund accounting book would be internal, and that's how we perform like internal versus external reconciliations. Whatever items or transactions will be on bank statement and investment statement, those it should be reflected or recorded in the accounting system. And if it is not, then you should investigate, find out, and resolve it out. Just to understand again little bit more, look at this. Let's say we have a fund which is LP Limited Partnership Fund, and we have a Geneva, which is accounting system. In Geneva, what we record transactions, let's say for a capital call. So when we record transactions for a capital call in Geneva, because Geneva is an accounting ERP system, we record transaction. So same Geneva, let's say this fund has a custodian or bank which is a State Street Bank for a cash payment management or treasury management. So once the capital call book, so it means there will be a cash in, right? So basically on a bank will set up account for ABCD fund, which is 1 2 3 whatever number is, and on this number bank will accept the cash payment from the investors. So investors will deposit money, so there will be a deposit money, right, transaction type, but deposit for what reason? Deposit for capital call reason. So in account, as a recon analyst, it's your responsibility to match capital call transaction versus this cash in. And let's say sometime what happened, let's say there is a capital call booked, but against capital call, let's say wire payment which is not there in the means it is not there, then in that case you need to investigate in a bank statement and find out. Sometime what happened, let's say this amount has been posted in two split or two sleeves, so it means there are two transactions against only one capital call posted. Or sometime happened that let's say payment received, cash in, but the capital call hasn't been recorded yet. So in that case, then what you need to do, take a screenshot of statement and book the capital call by referring the cash in, and they adjust the accounting records, because this is highly critical and important. It will impact on NAV of the fund. Same, let's take another example. Let's say fund has invested something. In terms of investment, what happened? Investment, it means fund has transferred some amount, let's say, to the broker account. Broker, it means in this case we have a JP Morgan. So JP Morgan will maintain the accounts for ABCD fund, and under ABCD fund, let's say this fund has purchased investment of 5,000. So this you can take it as an investment reference. Try to match with the cash out. Here you can see cash which will out if fund purchase something. Means same impact you can see. It's a three-way recon. One, the proof which we have on a JP Morgan statement. Second, proof of payment we have on a State Street. And third, this, by referring this to, you need to create records in accounting system as an investment. So you need to book the trade as a buy, sell, depends, right? The third one, let's say we have a wire of $500. Then you need to figure it out. Okay, we have an expense of 500, or sometime expense it will not be there. So you need to adjust it by referring statement. See, this is how, guys, reconciliation come into picture. In a day-to-day operations of a fund or broker, bank, you may see lots of different scenarios where you need to figure it out, discrepancies, and adjust it on time to make sure that those are not let's say aged break. Because sometime what happen, let's say if you have a huge money pending under unapplied fund or cash, it may issue or it may lead to the client money as well. So we need to take care of that portion also. I'll explain that what is client money in maybe one of the session. Now if we talk about the reconciliation types, we have different types of reconciliation, which is internal recon, and another one is external recon. Under internal recon, basically internal books or internal accounts or ledgers that basically we verify, reconcile, adjust and correct it. So for example, let's say group ledger versus trial balance, that would be your internal recons. Trial balance versus financial statements, that will be your internal recons. If I talk about external recons, let's say when we cross verify the brokers or custodians statement versus accounting books, that becomes your external recons. Okay, and apart from that, we have again other reconciliation main categories. I would say one is cash recon. In a cash recon, basically we figure it out, cash in and cash out, right? If you have purchased something, cash should be accurately debited or applied. That's how in a cash recon, most of the transactions that we verify, which has been dealt with cash or which has been, let's say, traded in cash or executed in cash. So basically, in short, if you ask me, we check cash in and cash out. Cash in would be in case of sell, income and contributions. Cash out would be in case of buy, expenses, transfer, distribution. So you just need to figure it out, if you're working as a recon analyst. In terms of position, intraday positions and derivative positions, basically that we try to reconcile, like buy, sell, call, put and futures. So that all we reconcile and update it in the books of account. And third one is depot recon. Depot recon is for stocks or deliveries. If we have any stock purchase, and if that stock purchase which is in a demat account, so you need to figure it out demat account holding as well. So if it is a purchase, look at the quantity. Quantity should be accurate on trade date, settlement. If not, just figure it out why we have a difference. Check the corporate actions, because due to corporate action also sometime you would see impact on even price as well as on a depot positions, because in a depot you might see the let's say due to stock split or bonus issues or right issues or delisting of securities, there is some discrepancy. So you need to figure out that and and adjust accordingly. So this is how we have a different types of recons that you would see in a banking, accounting or even broking system. So I hope you have enjoyed this session, and yeah, I'm done with this. If you like this, please do share, comment and ask other people to also watch it. And you can share feedback in the comment section. How was the session? Look, we have recently started free even SQL and Power BI trainings on YouTube. You can go through it and upskill yourself, because Power BI, SQL would be highly important in payment domain or even wealth management domain and in a business consulting. Okay, all right guys, I'm done with my session. Thank you very much for watching this. We'll see you in the next episode. Thank you.